Okay, so my name is Henry Gordon Smith. I'm founder and CEO of Agritecture. Agritecture is a global advisory services and digital services company. And we do a lot of work for the sector, from helping to design CEA facilities to providing services to cities and policymakers. And we also do due diligence services for investors. And today, we really want to focus on aspects of controlled environment agriculture, the excitement around the sector, and some tips and strategies for investing in it. With all of this excitement, how do you think about that strategically? And we have an incredible group of speakers here with us today. And so we'll get into some of those introductions now. I just want to remind you, if you have any questions, you can use our Q&A feature. And at the end of the webinar, we're going to try to answer your questions. If there's some really good ones that we don't get to, we may even answer them in a follow-up. So definitely use that feature to ask us questions today. So as I mentioned, I'm Henry Gordon Smith. I lead activities at Agritecture, but I'm also joined by the amazing Louisa Taylor. Louisa, tell us about yourself briefly.
Hi, everyone. Great to be here. Thanks, Henry. I'm the head of media and research for AgFunder. We're a venture capital firm investing across food tech and ag tech. We've made about 30 investments so far globally. And yeah, I head our media and research, which is our news site AFN, as well as we do various different investment research reports.
So great to have you here. Thanks so much. And over to Rob Glanville. Can you tell us a bit about yourself?
Sure, Henry. Thank you very much. Good to be here as well. I'm a 35-year experienced investor deploying capital across a bunch of sectors. And spend a lot of time thinking about how entrepreneurs work with capital to build businesses, because that's in effect what I love to do.
So great to have you here. Thanks so much. And over to Andrew Carter.
Hey, everyone. Thank you for having us. I am co-founder and CEO of Smallhold. We grow specialty mushrooms in New York and Texas. I have a background in indoor agriculture, and so we could talk about mushrooms, but we can talk about all sorts of other types of crops if you'd like.
Awesome. And Darren Thompson?
Yeah, hi, I'm Darren Thompson. I'm the CFO for Bowery Farming. And I actually don't have a background in agriculture. My background is entirely in finance and in renewable energy, which both obviously intersect with this sector really strongly. Prior to being at Bowery, I've actually built two different renewable energy businesses for Google Ventures, and they're also an investor in Bowery. So happy to be here today to talk about industrial scale indoor agriculture.
We're so happy to have you, Darren, and I think you're going to get a lot of questions as well. And over to Djavid from my team. Djavid, what are you all about?
Hey, how's it going, everyone? My name is Djavid Amidi Abraham. I'm the director of consulting at Agritecture. I lead our consulting division, especially the technical work, and I head a lot of our due diligence projects. So I'm glad to be here today. I'm glad everyone was able to join us, and I'll be speaking about controlled environment agriculture and some businesses that are emerging from that sector.
Okay, well, thank you, everyone. So I'll be running the webinar, and for anyone who's seen me do a webinar, I run a pretty tight ship, so I may remind speakers to give their answers quickly to keep us on time as we cover them. You'll sort of notice that speakers will come and go as we cover various topics today to help you understand how to invest in CEA with confidence. So first off, a bit of an introduction. So this is me here on the left, you can see, with much longer hair, and I'm actually visiting North America's first publicized commercial vertical farm, local garden in Vancouver, Canada. And since basically 2010, Agritecture and my colleagues have been advising on projects all around the world. So this is sort of where our expertise comes from, is a diverse understanding of how CEA works in multiple climates, economic conditions, social conditions, and where the trends are varying around the world. First, a word of warning. This is the vertical farming graveyard. So just really briefly, when we start on the right with local garden, the farm I mentioned, this farm primarily failed because it chose the wrong crops based on its scale. It was downtown Vancouver and it decided to grow leafy green salad mixes as opposed to focusing on the high-end customers of restaurants. Podponics, one of the reasons why they say they struggled a lot is because the container model of multiple containers with different climate control, you can see the AC units on each, really affected the unit cost, and they weren't able to compete in the market. Farmed here, if you looked at that case, this was the largest vertical farm in North America for a while. It's 60,000 square feet of footprint. They pivoted between aeroponics and aquaponics and hydroponics. They got organic certification, but in the end, they couldn't recoup those costs and they shut down. Metropolis Farms, actually, our colleague here, Jack, actually got into some legal trouble for being dishonest to investors. And even though the city supported that farm, that ended up failing as well. And over in Sweden, Plantagon, this utopian idea of vertical farming, ended up running out of money before it could build its biggest facilities. So this doesn't mean vertical farming can't work, but as a nascent industry, it's important to look back and see what has and hasn't worked. And that's how Agritecture thinks about things. What hasn't worked and how can we build upon those for the future? So it's very important that we think strategically about investing in the sector. These risks associated with it are backed up by Agritecture's research that we do. We do an annual census to talk to CA operators. And as we can see from this, many of them, if they could go back in time, would choose different equipment or different crops. We also know that most of them are struggling with profitability. And we also know that half of them about have 0 years of agricultural experience, which obviously increases the risk if you're running a farming project. So lots to consider here as we think about the future of the sector and how we can reduce these risks and make investments that are smart and wise in it. One of the ways that Agritecture is trying to assist with this is we're bringing in financing solutions into our online platform, Agritecture Designer, and these are some of our first 3 partners. And we see this as a means to support the smaller entrepreneurs and startup farms that are looking to get into the sector that could eventually grow to be bigger projects. And so you may be interested in talking to Agritecture about this, because by having a portfolio of a broader range of farming types, it could be seen as a diversification strategy. And you're welcome to talk to me about this or explore our partners at design.agritecture.com. So next up, I'm going to pass it over to Djavid, my colleague, who's going to give us an introduction to CEA and some of the thinking around that. Djavid?
Thank you so much, Henry. Hello, and thank you all for joining us. My name is Djavid Amidi Abraham. I'm the Director of Consulting at Agritecture. At Agritecture, I lead our technical consulting work and head our due diligence services. And today I'm here to provide an introduction into CEA technologies and companies. When we talk about commercial CEA, we're mostly talking about 2 distinct types of growing systems. One is greenhouses and the other is vertical farms. Here we can see some of the advantages and disadvantages of greenhouses, but in summary, greenhouses tend to be much cheaper to implement and operate than vertical farms, and they have the ability to produce a product that is competitive, and they can do so locally. Maybe they can't do that directly in a city center or metropolitan area, but they can be located directly out of those areas and distribute into them and produce a very competitive product to those coming out of vertical farms. Additionally, a wide array of products can be grown in greenhouses, and greenhouses take advantage of a free resource, the sun, which helps drive down costs of production. Vertical farms are really unique because they allow growers to have maximum control over their growing environment, and they can control that at scale. They are much more expensive growing systems to implement and operate, but enable very high quality crop production in ultra local settings or inside metropolitan areas. The main disadvantages to these systems is that they tend to incur very high operational costs. Costs of implementation are still relatively high. And then in terms of operational costs, you have to illuminate every square footage of bed space, which adds to those operational costs. Greenhouses, on the other hand, can rely mostly on the sun for illumination, which is a free resource, which helps them drive down costs of production pretty significantly. We see 2 distinct markets emerging for CEA products. One of these is the ingredients market, which you can see some examples of companies that are addressing this market here. These are very high quality products. These are more premium herbs, edible flowers, microgreens, products that would be sold to a home chef or a Michelin star restaurant or a very discerning customer base that would typically find these types of products at a farmer's market. The key takeaways from this market segment is that there are very expensive systems that tend to have higher labor costs. They can produce higher value products because of the level of control they have over the system. And additionally, they can produce these products very close to market. The culmination of these factors create a very interesting segment of the industry that is being addressed by smaller scale CEA systems that are highly distributed. On the other hand, we have a very high volume market that is being addressed by large players like Gotham Greens, Fifth Seasons, and Aero Farms. These companies are really trying to drive innovation through scaling up their systems, having very high control over the growing environment, but are addressing a market that is more geared towards premium salads. So in many ways, these companies are trying to displace the product that's coming out of California and Yuma, Arizona, and are finding homes on shelves of places like Whole Foods, Kroger's, other very big box retailers. The success in the industry is really driven by a few key takeaways. One of these is that scale is really what's driving down the cost of production. So a lot of these companies try to have as much bed space as possible, and some do so by stacking that bed space vertically. The larger, the better in this industry, and that helps them integrate automation and reduce the labor inputs that the smaller scale industry segments of the industry suffer from on the sides of operational costs. One of the advantages of this market as well is that it's still very local. Even if you aren't producing directly in a city or directly next to your market, you're still producing a local product that has many of the same features as those grown in metropolitan environments. As we do due diligence on these types of businesses, we see a few very key red flags. One of them is overstated yield projections. R&D yields are almost always higher than what is seen on the farm. So if an operation is providing information that they expect to see higher yields on their farm than in their R&D settings, I would be very skeptical of that. Additionally, proposed improvements that are expected to increase yields more than 20%. That is another red flag that we see. There are some innovations that can push yield improvements, marginally, but over 20% requires kind of a second look and really requires some scrutiny. And that's kind of the litmus test that we use for understanding whether proposed improvements really are kind of hold weight. Additionally, we see a mismatch between scale and product choice. When you're producing in very high volumes, you need to be producing a crop that sells in very high volumes as well. When companies that are operating 100,000 square foot plus of bed space choose to be producing a herb or a microgreen that doesn't necessarily have high demand in the market, or is doing so in a market that is relatively small, that raises some red flags as well, as it makes us wonder whether the market would be able to absorb that product. Another really key factor is just a general misunderstanding of key factors that impact long-term growth and sustainability. I think there's a misconception in the industry that just because you're growing indoors, it's sustainable. There's kind of more to that, and it's really important to look at where you're getting your power from, as well as the impact of LEDs, the efficiency of LEDs, the efficiency of your labor use, as well as power use, and how those contribute to margins in the CEA industry. So these are some of the key red flags we look for. These are common things we see in the industry, and things that we encourage everyone to look at as an investor in CEA farms and operations.
Thank you so much, Djavid, for that rapid introduction. And Djavid leads a lot of our due diligence work. So as was mentioned, you can reach out to him here. So thank you for joining from sunny and very early California this morning, Djavid.
Thank you. It was a pleasure.
So now that we have the introduction, I really want to turn over to kind of look at the past and the present of funding for this sector. And who could we speak to better than Louisa Burwood-Taylor at AgFunder that tracks this? So Louisa, you can just say next slide whenever you want me to go to the next slide, okay?
Perfect. Thank you. Yeah. So as Henry said, we track all investment into food tech and ag tech. So really from farm to fork, we have a partnership with Crunchbase and with various different partners across the world to get the most complete picture. And as you can see, this is some of our categories there. I know it's quite small writing, but the point of this chart is to show you that novel farming systems, which is our category in which controlled environment agriculture lives, only took in about 5% of funding in 2020. And in fact, there's other types of novel farming systems within that. For instance, insect farming, which is, has had some big rounds in 2020. So this is just to show you that this is still a very, very small piece of the overall food tech and ag tech market in terms of investment. I think if we were to judge it on like column inches and the amount of media exposure that this space gets, you would think it was a lot bigger. But in reality, it's still a very small portion of what early stage investors are looking at and investing in across food tech and ag tech. Next slide. And here again, you can still see the same point. $1.3 billion invested across novel farming systems in 2020 across 99 deals. That's not insignificant, but if you go to the next slide, you'll see when we dig into CEA specifically in 2020, there is what we project will be just over $500 million of investment. Quick note on the yellow bar. We have been tracking this space for years now. We're constantly updating our database. Often investments are not disclosed at the time that they happen, and they are revealed later on, and we constantly update that. And so our figures are changing and updating for previous years. So that projected increase is what we expect based on modeling what's happened in previous years, where it's going to land for in 2020. So $500 million. Again, not insignificant, but compared to the 30 billion across food tech and ag tech, it's still pretty small. Next slide. And then just having a little look at like how investment has changed from 2019 to 2020, obviously in a pandemic context. And what we see here is that investment in earlier stage startups in CEA declined, whereas it increased for growth and later stage. And this is something we saw across food tech and ag tech. If you think investors were probably a bit more risk adverse during the pandemic, they were placing bets on sort of more established companies. And I think within CEA, there's been quite a bit of unproven nature of some of the technologies. And now you have some of the large players are really kind of growing and driving home. So a lot of the investors want to kind of back some of those guys. And that's what you can see there. Next slide. So I think, so if you think about it, it's a small subsector of food tech and ag tech. There's been quite a bit of hype, as I mentioned. It's been an exciting space. It's kind of sci-fi dreams. A lot of people are very excited about it. But, we are still at the point where it's mostly leafy greens. I'm sure we're going to go into some of this later. And I would say that we probably have had a peak of inflated expectations. So at AgFunder, we actually do not invest or have not invested in actual indoor farming. We have invested in ancillary technologies. So one of our portfolio companies is called Intelligent Growth Solutions, and they actually provide grow systems for indoor farmers. So they're not getting involved in the actual farming. They are providing that technology to do it. And that, to us, feels a bit more like a venture capital type investment. It's less kind of infrastructure heavy. The capex is not so high. And if you think about in terms of being an early stage investor, getting involved in later stage rounds, it's going to be really hard when the rounds are, hundreds of millions of dollars to maintain, a decent share of the cap table. So that's where we have liked investing. And having said, that it's been like this sort of slow uptake, I think we're kind of at an inflection point now where we're seeing some real growth. So for the example of IGS, they have 26 grow systems in place today, and they expect that to be increased by 3 times by the end of this year. Another good example is Bowery, which is a New York tri-state area big plant factory company. They have had 750% growth in their brick and mortar grocery store sales since January 2020. So I feel like we're on this upward, maybe at the bottom of the slope of enlightenment. This is the Gartner hype cycle. And I feel like we're slowly getting to a point where we hopefully we're going to see some exponential growth. But yeah, it's still, still early days.
Well, thank you so much, Louisa. Really insightful to hear all that tracking that AgFunder is doing, and also very interesting to hear that you haven't invested in a producer yet, and some of the insights on IGS as well. We're going to get to that a little bit more as we look at the industry ag tech landscape, but thank you so much. Appreciate that. So this next section is going to be led by me. I'm going to give a little bit more information about why everyone's so excited about CEA. And I will ask Rob and Louisa to comment at parts of this. So let's dive in here. So first of all, the fundamentals, right? Like what is really driving CEA? Why is everyone so excited about it? You heard some of that from Djavid, but here are some of the three sort of aspects to think about. First of all, consumer demand. This comes from urbanization, disconnection from nature, but also wanting fresh local food and clean food. That's driving a lot more production indoors. System related, we're seeing that the climate is changing. The consequences of that are having some effects on agriculture. Scarcity of land and water is driving more farming indoors. And the pandemic showed us that our supply chain isn't as robust as we thought it was. And so we may want to bring it closer to the customer. And then we also have these tech drivers like steady improvements in LED technology, new technologies like AI and big data allowing us to improve exponentially faster, and automation that is cutting down the cost of labor, one of these key operational costs that's affecting the ROI for these facilities. So these are real, a significant list of fundamentals that are driving the sector forward. But over here, we've got some hurdles to overcome that Rob and I were talking about. Rob, do you want to share some of your thoughts on these hurdles despite those drivers?
Yeah, absolutely, though. I love the Princess Bride trough of disillusionment reference that we just got from Louisa. Yeah, I mean, when you're thinking about deploying capital in what is a project finance type environment, where there's a requirement of CapEx and a J curve, a period of time until you can grow sufficient product to cover your operating costs. Really having a core understanding of your unit economics is crucial to deciding whether you're going to deploy the capital. And some of what's been brought up already is around the questions you need to ask to be able to go after understanding those unit economics and understanding what we call your J curve, which is the depth of capital and cash that you need to deploy before your operation is generating positive cash flow. Henry?
Yeah, thanks so much for that. I mean, I think one of the things been most interesting is this one size does not fit all. In the early days, there was a lot of marketing of, containers or plant factories. We've really learned is that local context matters and the design process matters when it comes to this sector. They're not just systems you can just plug everywhere. It actually has a little bit more nuance than that, which has been exciting for me as someone who likes to design the businesses and the concepts and the technologies for these facilities in particular. So next up, I'm going to talk a little bit about market size, which is always I think a hot topic, a debate to see like how big is this opportunity. And I'm going to look at it from 5 different perspectives. So the first one is the overall biggest perspective on this. And this is from a research study that basically showcased if we look at all the available spaces in cities around the world, including some indoor spaces, what is the total economic output of that from the product, but also the ecosystem benefits of growing food closer to and in the cities. This includes other types of urban agriculture like rooftop, et cetera. So the number is actually $80 to $160 billion in annual value if all of our available spaces in cities were converted. So these are vacant spaces. These are spaces that are not used for commercial residential uses. So that's 10% of the global supply. This is not super helpful for us in CEA, but at least gives us a sort of top line number to work from. Some of the reports that are out there, this one was cited in an EY report, so I thought it gave it some legitimacy. Give a sort of $1 billion number as it relates to the sector today. This accounts for vertical farming facilities and equipment providers and the sector overall. We've seen some of these numbers actually be much higher, around 7 billion, 9 billion. I don't find a lot of value in these reports personally because they're not, to me, directly connected to a bottom-up approach to the market sizing, which I'll get into a bit next. Let's look at the North American market. So if we think about the North American market, we can think about the crops that could be sold in vertical farms in the future that make the most sense. And so if you look at figure 1, we've got the value of the crop and the perishability. And so from our assessment, we look at culinary herbs, leafy greens, potentially some vine crops with CEA greenhouses, and strawberries being in this category. From that category, we can then say, okay, about 25% of the total market is a luxury and quality product, meaning it's food safe, it's local, and we see a lot of the CEA products today not necessarily competing directly with field, but competing more with organic field, a premium product. So from our assessment, from that perspective, that gives about 17 billion in North America as an obtainable market for CEA for these crops listed here. And so that's not insignificant. And I think that we're getting a little bit more accurate from a potential buyer's perspective of the market size. Another perspective that we look at is a much smaller number. In this case, Agritecture looked at the market in Europe and North America. So I'll show North America next. And we looked at how many farms are there. And we looked at public information and sort of what we know about the sector, having worked in it for 10 years. And so we found 95 farms and 55 farms that had public area data. And for the remaining ones, we gave some estimates. And so we looked at the actual bed space, how much bed space of vertical farming is there? And this is not greenhouse. This is only vertical farming. And so that gets us to a number about 250 to 400 million in bed space. So you could think, okay, if I'm an equipment provider and I'm selling to Europe, that's like all the equipment that's going to be built potentially every year. You could say maybe not even every year, but that's what exists now. So that's another way to look at it. And then we also have North America, which is an even smaller number, surprisingly, in our analysis. And I think that's because there's been a lot of really big announcements in Europe as well coming soon, and a little bit more farm data that was available in Europe relative to North America. But these are sort of the markets from an equipment perspective, not necessarily who's buying your product at the store, but this is really based on the technology and the equipment, which may be interesting to some of you, depending on who you're thinking about investing into. So Rob and Louisa, do you have any thoughts about market sizing? I mean, I went through a bunch here. I just wanted to give you a chance to comment. What's your opinion about the sector? What are some of the things you've seen?
Yeah, I mean, it's always quite surprising how small the numbers are, right? And also, so talking to Bowery recently, and they said that with their new farm, their biggest one ever that they're building at the moment in Pennsylvania, they'll be able to sell about 20 million clamshells a year. But that's only the equivalent of 115 acres worth of outdoor production. So, it's huge high volumes, obviously, that are going on in the outdoor market. And it just is going to be interesting to see when it'll really have like any kind of impact on outdoor or any, encroach on any of those acres. But in terms of being a technology provider, these numbers, if you're an investor, you're often thinking about market sizing, right? And I'm sure, Rob, you could speak to this, and you're thinking about what is the addressable market. These, numbers in millions so far today are not that exciting, but this is what's happening today, right? Those numbers are what's today, Henry.
So this is like the value of the farms today, and this is the potential market for the produce side, which is a bit, this is an addressable market. We can have a business case here for sure. But building on what you said, Louisa, I thought it was interesting. You sort of mentioned that you think there's about 30 hectares of vertical farming globally, correct? Was that the number?
That's right. About? Yeah.
Which is like, just think about that, 30 hectares of vertical farming. That doesn't, or maybe novel CEA as well is included in that, right, Louisa? But that doesn't account for necessarily all of the traditional greenhouses, but still.
No, exactly. And that compares to 50 million hectares of outdoor cultivation. And 500,000 for greenhouses.
And that's why I think for the foreseeable future, we're still talking about this category, right? There's still so much room to disrupt in this luxury category where these products grown in CEA can provide fresher flavor, locality, cleanliness, and trust in certain markets, other environmental benefits. So, I mean, this is still the target for the foreseeable future, as I see it.
Yeah, and I think sorry. No, I was just going to say, I don't think we should underestimate the importance of that freshness and like the nutritional quality of these crops too. There's certainly a turning point now in like consumer demand. I know that I'm super picky about my strawberries or my leafy greens now. And I'm really looking for that change. So, I think we shouldn't underestimate that sort of consumer demand side.
Yeah, I think the demand is definitely up. And you mentioned those Bowery numbers on sales. We're going to hear from Smallhold as well. I think the operators are selling more. So that's a good sign as well. Rob, anything to add on market size, or could I continue?
The only thing is, if you're looking at it with an investor's hat on and you're thinking about scale, you often look for existence proofs of where others have been able to take an idea, take it through pilot, and take it to scale, where the scale is meaningful in terms of deploying capital. We're still at that stage of the development of CEA here where we don't have those highly scaled existence proofs. And the connection between pilot and scale, scale is defined here as 30 hectares globally. It's going to be very difficult to attract 9-figure investments when faced with a lack of existence proofs.
Yes, this is going to be the next few years. We're going to see what happens as these companies scale and the operations get much bigger. Thank you so much for those thoughts. Just a couple more thoughts on the sector and some of the drivers. One of the sort of hypotheses, which I think is pretty accurate, is that the rate of change in technology as it improves in outdoor field and greenhouse, we're going to see the most dramatic increases in vertical farms. And this is just important to think about as an investor, right? There's more exponential tech in a vertical farm than there is in a greenhouse or an outdoor field. There's more sensors, there's more measurement. And so the rate of improvement is then accelerated, which I think is why a lot of investors are betting on vertical farming over some of the other approaches. But you need to think about that for yourself. What do you think the rate of change and improvement is in the other integrations relative to vertical farming? And are you betting on the right horse, so to say? And this is, again, some sample of those technologies that are really, shining in vertical farming, that are all working at once, together, integrated, and unlocking new ways to grow crops faster, better, et cetera. And so you can investigate some of these. I'm sure our farmer panel coming up in a moment is going to showcase a little bit of what they're doing with their tech. To wrap up this section, I just wanted to showcase this. This is the 2021 Indoor Ag Tech Landscape. So this is, the industry we're talking about. These are specific companies and names placed in different areas. And so what I wanted to focus on was this section was we have greenhouse growers and sunless growers. And one of the things I share a lot is that as the sector matures, we need these folks to be extremely successful, right? Because then there's no business for IGS or anyone else who's selling equipment to the sector. We have to have the foundation of the sector has to be farms that are growing better product and can get a return on investment for their facilities. And then all the tech that feeds into that, all the services, all the software, all the hardware, has to feed into that. But we have to get to that goal. And when we think about where the sector is leading, that's the big question for me, is can we make sure that the farmers are profitable on a per farm basis to ensure long-term growth of this very exciting industry that certainly I'm committed to. So Louisa or Rob, any last thoughts on this one?
Not for me.
Okay, no problem. But I think that's the message here, and just want to help you understand the landscape and some of the drivers and things to consider. But it would be a mistake if we didn't talk to some actual CEA operators themselves to learn from them. So next up, we're going to have a panel with some exciting guests, Darren Thompson, Andrew Carter from Bowery and Smallhold respectively. And to kick off first, we are going to begin with Bowery Farming. So Darren, I see you're there. You ready to go? Tell us about yourself and Bowery, and just say next when you want me to go to the next slide.
Yeah, sure. And I apologize in advance. Some of the slides that we have here may sound like a generic primer in environmental controlled agriculture. And I think one of the issues in the industry is that a lot of the companies are kind of describing themselves on similar terms, but there are some real differences, some very fundamental differences to approaches to the business. And what I want to do is just highlight a little bit Bowery's approach, which is a little bit different, because everyone's going to make claims about, local, safer, higher quality food, water efficiency, use of technology in the growing systems. I think those are sort of table stakes in the industry. And I want to talk a little bit about what we think it takes to really differentiate platform from the rest of the industry. And so, first of all, I want to thank Louisa for the shout out about the growth in our commercial platform. And that's something we're very, very focused on. And I think if you look at the stores, in fact, Henry, if you wouldn't mind flipping ahead a few slides to look at the places where we have distribution, I think a little further, might be the second to last one. Right. Well, back one.
This one?
No, there should be one back.
This one. We did cut them down a little bit, Darren. So
you took out my money slide. Thank you, Henry. But it just showed the places where we have distribution in terms of all the grocers where we have penetration. And so what you look, if you were able to see that slide, is where you'd expect to see our product, which would be places like Whole Foods and some of the premium grocers. But as well, you'd see on that list Walmart, which is actually our single largest customer. And so our whole focus is on democratizing access to fresh food. It's not about skimming the top end of the market with niche products, which are only appealing to the top 1%. It's about reaching the mass market with product that's competitive with field-grown product. And so in order to do that, you need to be able to do it very efficiently at scale. So what does that mean? Being efficient at scale is not singularly about how do you operate a farm from a level of profitability. It's how do you offer a completely integrated service model to your customers and help them to solve the problem that they're trying to solve. And the problem they're trying to solve is not just price. The problem that our customers, defined as the grocers primarily, are trying to solve are, how do I de-risk the supply chain in my business? How do I eliminate some of the risks associated with the vagaries of outdoor growing and having product transported from very long distances? How do I deal with the issues of inconsistency of the product that I receive? How do I deal with the issues associated with on-store, on-shelf shrink and then shrink in my stockroom? How do I deal with the issues of the fact that there's a lot of seasonality in terms of what's coming out of the field, and my consumers, frankly, would buy, for example, basil all year round, or buy my crispy leaf all year round if it were available in the field. And that doesn't happen to be the case. And so if you look at the business as solving a set of problems for the grocer customer, who again are targeting margins in this space, which are actually higher than margins they have on any product that they carry in their grocery store, simply because there's a very high diminution from targeted gross margins to actual realized gross margins because of some of the risk and issues I just described. You understand that it's not just about getting the most competitive price. It's about solving that set of challenges. And so we look at this business not just as using technology to solve the growing problem. It's using technology to solve the end-to-end supply chain problem. And that requires a very different investment in the software layer of the business than I think is just sort of narrowly focused on growing. I'll stop there. I've got a lot more to say about our business model, but that is our approach, and it's worked well, and it's helped us obviously to grow our customer base quite significantly in a short period of time.
Thank you so much, Darren, and apologize for the change in slides.
No problem.
But I appreciate that. We're going to ask you some questions coming up, so you're going to get a chance to showcase more and obviously talk about your investors and the amount you've raised as well. But let's move over to Andrew Carter, CEO of Smallhold. Andrew, how are you doing?
I'm doing all right. Thank you. Thanks for having us. So I'll try to go quick because I'm very curious about what all of the questions are between yourselves as well as the
audience. It's picking up.
So real quick, I'm the co-founder and CEO of Smallhold. We grow mushrooms. We grow them locally. We use a bunch of proprietary technology to do so. I obviously run the whole business, but I have a technical background dealing with a lot of greenhouses and vertical farms. I've had the opportunity to work with many of the people here in this panel, and so I'm obviously excited to be on the other end of this. You can go to the next slide if that's all right. So we go specialty mushrooms. What we saw in the market is a complete lack of exciting types of product and exciting brands in the mushroom aisle. If you go to the lettuce section in New York or Texas or any of the places that we actually are, it's a very competitive space. There's a lot of brands like Bowery and Gotham Greens and AeroFarms that are all trying to price at the same price. I didn't really want to be part of that. And so obviously I'm very excited about mushrooms and started developing technology to do so. And so we've grown pretty quickly. We were in a handful of stores at the beginning of the year, and we're now at over 125 stores. We actually just launched with Fresh Direct today. And so if you're in the East Coast, you can order our mushrooms. Please do so. Let us know how it goes. What's happening right now is Smallhold has a lot of excitement, but mushrooms in general have a lot of excitement. They're extremely healthy. They're a good source of protein. They're part of a food as medicine diet. They're pretty much part of every fad diet possible. And they're a great replacement for meat. And so any sort of trends around all protein or people getting veggie burgers and all that kind of stuff leads people into the mushroom aisle because this is the original single ingredient product. You don't want to be on a burger with 50 ingredients and high saturated fats. You can go get some of our mushrooms. And so how do we do it? We use a distributed supply chain. We have our own sort of distributed farms, both in Texas and New York and elsewhere. And we manage our supply chain in quite a way so we can be competitive on price and have a really fresh local product that's grown right near our customers. We also grow all of our products on waste streams. And so most of our substrate is waste from the timber industry. A lot of this actually goes to landfill, but sometimes it also goes to compost. But what we'll do is grow a really high quality product, certified organic, really fresh, And then all of our waste ends up going to compost anyway. And so we're part of a circular economy. It's very deep and ingrained in what we do. And I think it really helps us win at the market. And then we also have our own patented technology that we use in both the mini farm on-site installations that you can visit in some restaurants and grocery stores, or our off-site locations. We call those macro farms, big facilities. And those collect hundreds of thousands of data points per day. They push everything to our server. You've heard, I'm sure everyone here has heard the story of what AI and software can do to grow crops really well. That's exactly what we do at Smallhold. You can go to the next slide. So if you go to any of our grocery stores, you can find us at Whole Foods. In Texas, you can find us at Central Market and HEB, obviously on Fresh Direct as well. You'll see a big row of our different varieties. We actually grow 11 different varieties. We have different mix packs as well. And you know, you can either get them that are grown right there or grown from our larger facility. We're certified organic. A lot of sort of indoor farms have struggled with getting certified organic. It's our belief that when you build a facility, you should do what you want to do right in the beginning, and it makes it way easier to have that kind of certification than trying to address it later or try to market around it. We're zero pesticides. We're always locally produced. A lot of these varieties people have never seen before. Our packs are compostable cardboard. We have a lot of beliefs about plastic. I think that even though people are using post-consumer plastic and recyclable materials, a lot of time that stuff isn't really recyclable, and we didn't want to play in that because we see the mushroom aisle and it's filled with styrofoam and plastic when this is one of the most sustainable products that's probably in the grocery store, and then they completely wipe it out by wrapping it in that stuff. And so we wanted to change the industry and change it for the better. And so we focused on that kind of packaging. And we are cost competitive. If you try to get any of the stuff in the farmer's market or anything like that, we are way more affordable than that. But what we're really trying to do is get people away from button mushrooms or away from the meat aisle and get them into the mushroom section with the product that makes sense for them to feed their families with. And you can go to the next slide, but that's all I got.
Yeah, and there you can contact Andrew. And thank you so much to Andrew and Darren on that. And now we're going to get into some rapid fire questions for you. And we'll see if we get through all of them. And then we're going to open up for public questions, which is exciting. So let's dive in here. The first question on this panel is, what keeps you up at night about the future of CEA or the business you're involved with?
I'll take that first, Andrew. First of all, your product looks fabulous, and I will be buying it in the store the next time I go in. I'm a big mushroom fan.
It's amazing. It's so delicious.
So thanks for sharing that. I think the thing that keeps me up most at night, and I've seen this happen, frankly, in other industries like the telecommunications industry right after it was deregulated, the solar industry, when the federal government was throwing massive subsidies at an industry that was relatively inefficient at the time, is that there will be a ton of wasted capital deployed in this space. And that concerns me. I think it's difficult, for investors to separate the wheat from the chaff right now out there. And there's no better way to kill an industry than to have a longer graveyard than you just described, Henry, that you're dealing with. And so I think the thing that keeps me, and I think a couple of your panelists said this already, I think discipline around capital deployment, focusing on asset level returns, understanding the scale it's going to take to operate efficiently in this business, and targeting capital efficiently at the scale players. Scale players, Andrew, no, not disparaging what you're doing, but for what we're doing, scale is going to matter, right? And so I want to make sure that capital is directed efficiently so that it doesn't leave investors with a bad taste in their mouth and ultimately stifle the growth of a business that can be really exceptional. I'm going to take one just sort of detour here for a second. I think one of the things we focused on very early was the asset level returns in this business, not just in absolute terms, but relative to traditional farming. And so if you actually look at U.S. farmland, cash on cash asset returns are about 4%. That tells you two things. It tells you, one, farmland's scarce, which is the fundamental reason why I think a lot of growing is moving indoors. And the second thing I think it tells you is that the cost of outdoor growing is not going to come down. And you're seeing this demonstrated right now with a number of California farmers actually letting their fields go fallow because of challenges associated with getting water. if you take the long view on this business, it's not just whether this will be competitive. It's an absolute necessity from an environmental and a demographic standpoint, just because of some of the challenges of what's going on. And so we're very focused on driving asset level returns that will attract capital, and not just equity capital, but debt capital. Because when you're thinking about the total capital required to build one of these platforms, it's going to be very large. And so you need to be able to source capital efficiently, not just from growth equity or VC investors, but from more mature forms of capital, including debt. And so that's why we're maniacally focused on unit economics, to use a phrase that one of your previous investors talked about, to prove out, and we have proven out, that this capital can generate a return. And that's what's going to allow, us to grow. And I think it's important as well that at the other end of the spectrum, that not a lot of capital gets wasted in, people who aren't going to be able to turn the corner.
Thank you, Darren. Very insightful. Andrew?
Yeah, I totally agree with Darren. I think that, there's a big opportunity to invest in this space, but as a founder, and if there's any founders here looking at raising capital, it's very important to look at all different sources of capital, because if your business makes sense and you're building out spaces and you have contracts with retailers, then there are a lot of other types of financing that totally make sense for your business. And I think that it will spread out your runway and will make you a much more appealing investment for the future, and hopefully more just appealing business in general, because that is kind of the point here. And I think as far as what keeps me up at night about the space, I think we kind of addressed it a little bit earlier. I think that there's a little bit of confusion on what the actual market is of these products. I've seen, companies pitch the entire fruit and vegetable market as their market, which isn't the most realistic thing if it includes avocados and apples and who knows what else. Trillion-dollar markets are very exciting to invest in, but it's not necessarily what these companies are actually doing. And I get a little concerned that there are going to be some investors that are burned, because I think we've gone through this in the past. There was it's hard to find information about this, but there was actually like a big investment boom in greenhouse, like in the 80s and 90s. And there were a lot of big failures in that space. And it's not the same, but actually there's a lot of similar sort of trends at play. And we just no one wants that to happen, because there's a lot of amazing players like Bowery, for example, that I think that really have a chance to succeed. And it just would be a problem for the industry if that happens. I could talk all of.
No, that's great. That's great. I'm gonna jump to one more question from these questions, and then we're gonna open up to public questions, because that's been really popular. So this is my last question for you guys, which we talked about field grown and competing with that. We talked about market sizing. So Darren and Andrew, when do you predict that vertical farming? And I know, Andrew, you're doing mushrooms, so I guess you're already maybe competing with field grown mushrooms. But I know vertical farming for leafy greens too. But when do you think that vertical farming as a sort of high tech aspect is going to be able to compete with field grown?
Yeah, I have a lot of thoughts about it. One of the reasons why I really love mushrooms is that most commercial mushrooms are grown indoors anyway. And so we are competing because we are more efficient with our space and our investment and all of these aspects of our business. But I think that the existing industry needs to change. I think Darren, I don't know where Darren went actually. I think we lost him for a second. But I think that he's right in that the existing industry, if nothing forces them to change, then nothing will change. And so the existing lettuce and leafy green industry that exists in the Southwest, they have poor labor management. They are always fighting for the lowest price possible. And it's going to be very hard for a lot of companies to compete with that. What is happening is exactly what people sort of predicted, is that water scarcity and issues of labor and issues of distribution will create these sort of larger trends that lead more people to buy more indoor agriculture products. And these larger buyers are now committing to buying more and more of these indoor grown productions, I think that will just really help allow these indoor ag companies compete with scale. I think it's more of a shift of the existing space rather than any sort of innovations or anything like that on the producer side.
Awesome. That's a very important point and an interesting hypothesis there. Darren, quickly on this thought, you talked about field grown, you talked about you're selling to Walmart already. When do you think it can compete economically with field grown? When do you predict that?
As a total value proposition to the customers we're serving, we actually do compete with field grown. So that may sound surprising. So if you talk to Doug McMillan,
but on costs, that's you're accounting for everything, but on cost,
yeah,
just
on
not
cost. We are on shelf. We are on shelf at the exact same price as field grown product is at Walmart today. You can go to Walmart store in the Mid-Atlantic or in the Pennsylvania area, and you can get our product for the exact same price as field grown product. Full stop. And
so what? Are you selling at a higher price to the Whole Foods and a lower cost to Walmart?
No. I'm 100% clear about this point.
Okay.
I want to be 100% clear. We are on shelf at the exact same price at Walmart as field grown product today. And if you
organic.
No, just no, not organic.
Oh,
Let me finish my statement.
Okay.
If you talk to Doug McMillan or Charles Redfield, who runs the grocery business for Walmart, they will tell you full on that indoor growing is the solution for all of the challenges that face this product category. And the on-shelf price is a part of it, but it's not the only part of it. Adding to the economic equation for a grocer are the issues that I talked about as well. Complexity of the supply chain, vagaries related to getting product in from places like California and internationally in some categories, high levels of shrink on shelf, high levels of shrink in the storeroom, lack of adaptability in terms of controlling the mix of what they can put on the shelf at any point in time, inconsistent quality. And so I don't think this is a thing of the future, Henry. I think this is a thing of the present. And that's it's really important. We see no barriers to growing our business with the economics that are in place for field grown product and the way we sell to our customer base.
Okay, thank you so much, Darren and Andrew, for those. So let's continue to spread through here a little bit. Before we get into Q&A, I just wanted to say, if you're interested in any due diligence services, you can contact Agritecture. These are the services we provide, and we've been doing so for several years. So if you're thinking about investing in the sector, definitely at least have a conversation with us to see how we can help you look for red flags and make the right choice here. Let's get some Q&A. I might need your help, Brianna. I'm probably going to stop sharing the screen as I pick these. Okay, here we go. We've got some coming in here. Darren, this one's for you again, right? So you mentioned different pools of capital and some of the incentives that industries such as solar have received in the past. Do you foresee the development of alternative project financing options becoming available for CEA as they have for the solar industry, for example, such as tax equity? That was the example provided.
It's a great question. I think it's available now in piecemeal fashion, and it tends to not come from the federal government. It tends to come from state, local, counties, et cetera, as you're building new facilities who want to bring green jobs, high quality green jobs into their community. And so you find a lot of support at that level. At the federal level, you're indirectly benefiting from some of the support of the renewable energy space, the renewable energy industry. I think the federal government can do more. And that's one of the things we're talking to folks on the Hill about, is how can we take this infrastructure bill and do more around promoting use of renewable energy, which is not just the cost of the electrons, but also the supporting grid, the infrastructure necessary to carry the power to the various facilities. I actually have mixed feelings about whether a deeper level of support to the industry would be healthy right now. If I thought we were miles away from an economic viability standpoint, and you needed something very substantial to sort of level the playing field, I might argue for more deep federal government support to what we're doing right now. But there's always the risk that creates distortions, right? And so what you don't want to have happen is so much capital supported by so much federal government support bringing too much capital into the industry in an undisciplined way and essentially killing the golden goose. And so I think you have to take a bit of a balanced approach.
Thank you so much. Short question for you, Andrew. There was a question about your products being exposed. Are there any issues with that? Any shelf life issues?
Sometimes, yeah. I mean, we try to sell a really fresh product, and so it depends on the store. Some places sell out pretty quickly, and so we're delivering quite frequently. It depends on the store you get it. So there's like an open window one, and then we have a window on stores that might have a little more wait time on the shelf. But most people are buying the product pretty quickly, and so it's not a giant concern for us at this point.
Thanks so much. Djavid, if you're still there, we got a couple questions about the capital needed for CEA. And this is a question that can go to everyone, but you work and help a lot of entrepreneurs plan CEA facilities. Do you have any thoughts on minimum capital for greenhouse or vertical farms? If you're there, Djavid.
Thanks.
Yeah, I'm here. So for greenhouses, it can range pretty significantly depending on the level of automation, but typically you're looking at between $25 and $50 per square foot of bed space. And then for vertical farming, that can also range, depending on level of automation and where you're located, between about $150 and around $300 per square foot of bed space. So you can see some, pretty much scale of magnitude difference there in costs of implementation.
But to get started, it's difficult to get started without, $1 million, $500K for a small one. And then you have to scale up really quickly.
Absolutely. Yeah. So if you're planning on addressing a smaller scale ingredients market, probably greenhouses are the way to go. If you're, not operating with a ton of initial capital, starting out small, building out your market and your brand is a really great way to start. And then finding investment based on your unit economics and then scaling up from there is a really good way to go. It really for a lot of investors, it comes down to proving the market more than anything, because the technology is available. There's lots of companies that provide it off the shelf, and you can build a very successful CEA business that way.
Thank you so much for that, Djavid. So Phil was asking a question about the climate problem and greenwashing and how to avoid it. It's something I'm very passionate about. There's a lot of marketing of all the benefits of vertical farming, reduced food miles, reduced water, et cetera, but not a lot of conversation about some of the negative aspects of it, plastics used, embodied energy, carbon footprint. So we actually have a panel coming up in a few weeks specifically on that. So just go to agritecture.com/events. And you can see our indoor AgCon Agritecture panel, which is focused exclusively on greenwashing. And so we'll save it for that one. Let's go over to some of these other questions. Organic certification, this was a question we got from Saeed. Andrew, you want to talk about that one? You're one of the few organic certified vertical farms.
Yeah, I mean, big thing is that we're growing mushrooms. And so it's a different kind of production, obviously, than doing leafy greens. I've tried to get leafy green production certified organic as well. It's one of these things where, again, if you built your facility in the beginning as a organic facility, then you're in a way better position than trying to convert. Mushrooms and plants are completely different kingdoms. And so while we can be on the same panel together, mushrooms are biologically probably more like animals than like plants. And so it's not like the easiest thing to cross over. But I still do think that when anyone is trying to go and build these facilities, they should be approaching it. I think that there's a lot of concerns about organic or any third-party verification, which is totally understandable. There are a lot of practices that you can use in organic production that a lot of people probably wouldn't agree with. What I think is important about organic or any of these is that it is a third-party certification. And so while a company can say that they're better than organic or local or any of these things, you're just taking their word for it. There is accountability that is present when you have a third party like a organic certifier, which is why we really went for that certification rather than some of the other ones that are now available. Indoor ag is getting their own, and so it's an exciting time for all of that. But it does take a little bit more consumer adoption and excitement on the consumer base to understand what any of these certifications mean.
Yeah, that relatively recent news you mentioned of the CEA food safe certification is an interesting one. I'm sure we'll be publishing about that on the blog. I want to give a big thank you to all of our panelists. If you want to turn your cameras on, thank you so much for your time, your preparation, and participation today to share some rapid thoughts on how to invest in CEA. Really appreciate your time today. Thanks so much to Darren, Andrew, and Djavid, Robert, and Louisa, and all of you for participating as well. If you have any follow-up questions, feel free to contact Agritecture or any of the speakers. We're going to be running a whole series of webinars focused on technical aspects, sustainability, everything across CEA. So if you liked this or if you didn't like it, please let us know so we can improve and continue to share knowledge with you. Thanks so much, everyone, and have a great Tuesday.